This is an unsolicited growth audit for RetireRight Consulting Group. I have no affiliation with them. They didn't ask me to do it, but I spent the last couple of hours looking through their financial data for the past 5 years, as well as their online presence, to identify a couple of gaps and opportunities that I see for them to improve their stability and the growth of their firm. Let's get right into it. To set the stage, we're going through RetireRight Consulting Group. They're a wealth management firm that is based out of West Des Moines, Iowa, and they're currently managing over $550 million in assets under management. Right here, I have the 5-year growth trail that I've been tracking using the SEC ADV filings over the past 5 years. You have the total AUM as well as the high net worth AUM in their client book. Outside looking in, it might seem like, oh, look, they've dropped 6%. But truth be told, to manage a firm of this size, ranging from 500 to 660 million and staying relatively stable over the course of those 5 years is an impressive feat nonetheless. And so let's actually dive into the details of this and try to map out where there might be opportunities, where RetireRight Consulting Group might be trying to position themselves as, and see where the opportunities actually lie. So first off, what I want to say is their average AUM per advisor is 110 million or so. This used to be, I believe, over 200 million from the analytics that we were looking at. And that drop is a testament to they added employee count. So they added advisor headcount, but the associated AUM did not increase with their headcount, which generally means that they either lost capacity or, what's more likely, rather than bringing on advisors that already had a book of business, they're likely bringing on more junior advisors to help with the transition, help with the training of the next generation or the legacy of RetireRight Consulting Group in general. And this is also indicated in the average client size. Prior, they were looking at an average client size of over $1 million per client. Now it's dropped to 766,000. But again, this is still a very healthy average client size. They're still targeting affluent individuals or family offices, and they've clearly shown the ability to handle the capacity of a larger average client size base. Now it's really about rebuilding that capacity to get to those levels. Another thing I want to point out is the concentration of high net worth individuals in terms of the percent of AUM of their book. Initially, it was 50 of 600 million, so less than 10% of their book. They've actually tripled the high net worth proportion of their AUM to over 150 million, and now equates to nearly 30% of their entire book. So that likely indicates that the referral networks are strong within the high net worth community. That is a strong powerful indicator for them and shows that they're getting some traction in the high net worth sector. Now, if we scroll down and look at some of the diagnostics and positioning audits, the main thing here, again, is looking at how they're building and how they're adding advisors and the corresponding AUM. Again, here at the initial diagnostic, it's showing that, as you build in and bring on new advisors, you're incorporating fixed costs, right? You're increasing your actual costs, but your revenue base hasn't grown proportionally. So you're getting strained there. But again, if you look at it from the lens of likely adding younger advisors that don't necessarily have an established book, but are going to create their book while being at RetireRight, this is a great long-term play that will be very beneficial for the team over the long haul. Now, when you look at AUM volatility, obviously there's been some turbulence in terms of large growth, large declines, and not necessarily a base for predictable growth or predictable performance year to year. Something as simple as conversion tracking for each advisor to try and capture 2 to 3 qualified high net worth conversations per year, or introductions to track year over year to see how that's progressing, and attempt to start building a structured process to create some more predictable flow. And then over here on the positioning audits, we look at a lot of different opportunities for their value proposition, client niche, as well as content in general. So let's go ahead and look at their socials right now to break that down even further. First, I wanted to take a look at their YouTube and video presence. I'm a huge advocate for video first, especially in 2026, especially with AI on the rise. Video is the highest performing content medium in terms of building trust online, in terms of speed, as well as strength and resoluteness of that trust. And it looks like they've already tried YouTube and video content. And the first video they posted here was 4 years ago. So truthfully, they were ahead of the time. Wealth advisors 4 years ago were definitely not looking at video commonly, and now it's become more commonplace. So kudos to the RetireRight group for taking that leap 4 years ago, 3 years ago, and now it looks like 4 months ago, they created a highlight video to showcase their team. So overall, it looks like they're not foreign to video, they've embraced it, and this is a strong form of content that they can use and repurpose. My recommendation for them here would probably be to just reintroduce video, be more targeted in terms of the topics that they cover and the niche that they actually hone into. Again, looking at their website, they didn't really establish a strong niche. Obviously, it says RetireRight, so they're trying to target retirees, but being even more honed in on what type of retirees, where are they living, likely locally in Iowa, how old are they, what phase of life are they looking at, what is the type of lifestyle that they're looking for post-retirement. I think really honing in on those details is going to be really strong in terms of how they target their next client base, as well as how they position their content that they create. Now shifting over to Google search, looking at RetireRight Consulting Group, they have their presence known, they have a Google business profile, they have 23 Google reviews, so really strong in terms of their profile on Google and how they show up. So big kudos to them on here. I would just say to incorporate more reviews and maybe update some of these pictures to include more of the team itself. And overall, their Google presence is pretty strong, so not too much there. The last area I want to look at is their AEO, or answer engine optimization, essentially how they show up on LLMs and AI search platforms. So here we're on ChatGPT. I'll say financial advisor for retirement in Iowa. Let's see what pops up here. So we just type that in directly into ChatGPT. It's prioritizing fee-only fiduciaries, wealth advisors of Iowa, Silverson Stage, Financial, Pure, Ignite, Bellwether. So it looks like off the rip, they don't show up here, but maybe if we were to be a bit more specific and say financial advisors for retirement near West Des Moines, Iowa. Let's see if they show up here, and we're honing in on the actual proximity and location. All right, strong firms to interview in the West Des Moines area. We have Harvest Point, Vivid Tax, Bellwether, Midwest. Wealth Advisors, Gremler, Compass. Gotcha. So it seems like even when you're being targeted with the exact proximity and location, they're not surfacing. And I'd have to look a bit deeper into why that is, but likely it's because there isn't as much content being produced aimed specifically at retirees. So for an example, let's take a look at Harvest Point Wealth Management, who come up first. And let's go ahead and look at their website and see what's happening. So overall, the website seems relatively straightforward, nothing too crazy. I think right here already, the fact that they reference Jesus means that they're likely faith-based. Okay, perfect. So right here, you can see that Harvest Point has kind of mapped out a niche of sorts. Not just retirees in general, but they've honed in a bit more on a specific niche. So they look at faith-based. I suspect that having a more targeted niche helps with this in terms of how they show up. And then let's take a look at their YouTube channel. In terms of their YouTube channel, it seems like they're more active. They're posting more frequently, and yeah, this is definitely similar to what I've seen. They have a younger advisor on their team that's dedicated to producing video content. It looks like it's a market minute every month. So with just 1 minute per month, their team is producing content, and then they're also repurposing this content to be short form. And it looks like they're adding a lot of diversity and variety in terms of the type of content they're putting out there. So I think in general, they're putting out stronger pieces of content that are more tailored towards a specific client profile and niche. That's probably helping a lot. So definitely a couple of things that could be used as an opportunity to evaluate how RetireRight Consulting Group might be able to capitalize on some of these You've already shown that you can handle a large book of business, provide strong experiences, and build strong relationships. Now it's a matter of getting more exposure in the digital and now AI age and being able to actually reach the people that need you the most when they need it. So there you have it. There's a quick breakdown and analysis of RetireRight Consulting Group, a couple of the opportunities that they can capitalize on, as well as the plethora of things that they're already doing quite well. If you like this type of content and want to see more teardowns, make sure to like and subscribe and leave a comment below. Thanks so much and see you on the next one.